Hey, welcome everyone. This is an update on the algo. It seems that the market, we still have a correction phase. However, just right now, we had an offset in our crude oil on a compression stop. This is a trade which we gave the settings yesterday, or at least explained a little bit of the Algo 17 Extreme program. It's really a dynamic product. In fact, if we take a look at our performance summary, which we've got most of our traders in the trading room, you can clearly see here, most of these guys, they're out of the crude with the pre-E report, but they have zero regrets. As you can see, one guy, they got out. I mean, this has been a bread and butter trade. This has been amazing. And even the ES, and I'll get through that in just a second. So why is this so dynamic right now? And I think a lot of traders struggle to find their niche, they want to take that square peg in that round hole and force what they want to do. And they think that maybe ES is the E-mini S&Ps or mini Dow or NASDAQ is the trade for them. Other traders, you know, we want defined risk. We want decent trending market conditions and some good probability setups. And that's one of the issues that I've been trying to help traders overcome, is that, you know, you expand into other venues like the crude oil. And this summer, we've had, and for years, crude oil has been one of the more popular trades for us, even since, as people were talking about with Person's Planet, it was been an amazing thing. Now, this is a strategy that only goes back since September 24th, and I mean, it trades two lots. But let me go over here and define, if we go over to format symbol, and we're going to format this, and let's go back, because again, here we go. And we're going to go back since, let's go back 3 months. I mean, a 5-minute trade, it's 3, and let's go back 3 months. And hit OK. And let's close that up, and you'll see exactly what's going on here with our strategy. And I don't mean to interrupt our live trading room, but I think everyone would agree this is an insanity of a new high in equity curve. And I keep sharing this with you on my YouTube videos, and it's like we keep pinching ourselves. Ow! When is this going to end? It's just really a dynamic strategy. So the performance summary, I mean, shorts, ironically, exceeds 61% of the trades make money, 60% of the longs make money. I mean, look, you've got 290 trades. Most of the trades are on the short side, and this strategy only trades during, and I'll share this with you, from 9:05 in the morning, Eastern Standard Time, to 2:15. Now that says 1425, but it's -10. You're seeing some of the strategy inputs here, and you can see our position calculated method is set on number 3, which trades 2 lots. Max risk, max profit, and then there's some other functions in here that we use, and again, that are set up and optimized through the Algo 17 program. And that's what we're doing here. We have people can purchase the Algo 17 program, or they can join the live trading room. And then just to let you know, if you're interested in taking auto trading this, we've been asked by countless traders to say, hey, can I just trade the crude oil alone and get a subscription to it and then have it auto traded? And that's some of the things we're talking to a few brokerage firms to allow traders to take that as a strategy that they can apply under their own discretion. So anyway, it does a couple things, and I'll point out to you. So it trails out of half the position, this particular model, and then it scales out. And then this function here is a compression stop. We have 3 different stop methods. The last conditional change, a dynamic stop, which is a combination of my last conditional change, which I wrote about in this book, and a percent of ATR, average true range. And then the third one, which is compression, is a combination of those two, but it tightens up the stop as time evolves. So your holding period, if the average time that you're in a trade, and if you think about it, trends don't last forever, right? I mean, the markets generally go into a trend phase and then they consolidate. And so what your average holding period is, if you start to exceed that average holding period, the stops are tightened up, and that's the compression stop function. And that kicked in, as you can see, and took a hell of a profit on this particular trade. So, moral of the story, short this morning, and then it exited out. Whether if you held the whole trade or not, it was still dynamic. What a lot of traders are talking about, the ES, this is a gift that keeps on giving. This is our 15-minute model, which we've been talking about in the short side this morning, because what did it do? It mirrored or matched my volume indicator right there. So this is a proprietary volume indicator, and this is on balance volume. So when volume moves in the direction of the signal, so this is a short, so the volume had a negative momentum histogram reading. It generates, as you can see, it generates a short. It gives you a high probability. So this trade is still on the short side. Yesterday was another trade that was pretty dynamic. So the ES is, again, our algo optimizer is just doing a fabulous job. And what these lines represent in the chart, gang, is visually you can see this is one stop method, that's a different stop method, and that's an emergency stop. So in case something really goofy happened, you've got trailing stops in the works right now for half the position. So that's what the, right now, just to move forward, this is another, I guess, update on how things are doing here at Person's Planet in our live trading room. And again, our traders are seriously enjoying being present with our methodology. Here's the bottom line. Right now, moving forward, is this a garden variety pullback, or is this something to be more concerned with? Personally, the ISM number yesterday really freaked people out, and it put it on guard for that. Maybe we are closer to recession. We got the monthly unemployment report out on Friday. Right now, for the day, we finally had a VIX rating that spiked, and just in the last hour, volume kicked in on that trade. Our current model is short in the daily model on SPXL. It's a 3-time leveraged ETF. We are short. That is a short you can see here, and it's been in that short for quite some time, a few days now, since last week. When we have an active short on a trading model on a daily time frame, an active short on an intraday, trust me, day traders should not be trying to scalp the long side of this market. The advanced decline has broken down, and what I would have to tell you is I think by maybe Thursday, if we see some stabilization of this decline, then possibly we'll see where things go from here. But I'm not a consummate bear in the market. Here's my advanced decline work. We're closing in on some really what I would have to say channeling or sideways channeling support in the marketplace. In the NASDAQ, same thing. We're hitting near some really longer term support. The monthly pivot, the new pivot is around 180. We're at 183. So yeah, we might have a little bit more downside activity in the market. But after that, I think that here's my 2 cents of the market. The short term, yeah, we're on the short side, no doubt about it. And it's exactly what we called for in our newsletter. Let me reveal that with you. All right, so here you can clearly see, and we're kind of scraping the lows here in the market, 83. Okay, cool. So basically, the final word. We have low close doji signals, which measures, and I wrote this Friday, by the way. So the weekly chart here, let's take a look at our analysis. That's what this was highlighted. This was a low close doji, a person low close doji described in this book 15 years ago. So we still actively use those signals. The measurement objective targeted the market in the at least in the SPYs to get back down minimum objective, which we've exceeded it down around this, I don't know, 290, 288. Now we got our next support, which should come into play here, as you can see, around 283.5, and the spiders are at 289. So that's got a little bit more downside action, right? And the Qs here was what we were looking around let's call it, I don't know what you want to call that, 178, 178.97. Let's call it 179, 180-ish for the Qs, and we're trading 183. So maybe we got another downside or two, get everyone all really panicky. But here's the key. The advanced decline broke out and made a new all-time high. And here's my work suggests, and even in the crash of 1929, it didn't just happen on a new high on the advanced decline on a weekly basis. It weathered a few tests of those highs, and it came at the expense of a divergence in the breadth of the market, the advanced decline. So my work suggests while we do have a short-term pullback, I think it's a garden variety pullback, one more scare in the market. Get down in the basin here, maybe build some small speculators short in the market, put fear of God back into the market, and then we set ourselves up for an end-of-month October rally going into end of year with another Fed coming to another rate cut. So we want to be short-term on the sell side, but longer-term you want to look to buy a pullback. In fact, we're trying to get in AT&T on a pullback and also CVS on a deeper pullback, as you can see from my advisory service in the newsletter, these two positions here. All right, so again, the number one thing I want everyone to notice is that we are looking for more selling to work through this week. And the small speculators are short, and they're probably going to get shorter. And that's going to give us maybe fuel for a mid-month recovery rally. So it's going to be an interesting month. That's my longer-term assessment of the marketplace. I thought I'd bring that to your attention. And then as far as the shorter term, I mean, we're just enjoying the algos kicking into high gear. And again, having another stellar performance here with us at the Algo optimized program with crude oil as well as the ES. If you have questions, send them in. Thanks for watching the YouTube channel. Again, I had been absent from YouTube for several reasons. The hurricane threat that we had down here, which hit our neighbors to our east, the Bahamas, which was just devastating, man. That Cat 5 was brutal. But we still had to prepare for it, right? And when you pull things apart, it's easier to pull wires out than put them all back together. And we had lots of servers, computers, and everything to pull apart and protect for that hurricane. So it was business, it was home, and that takes, as you can see, scraps, scrapes, bangs, and bruises moving stuff. So I'm not the, and the funny thing is, when you want to hire someone, hey, they're too busy protecting their own properties. Anyway, so we got that. We did our in-house mentoring class, and now we're preparing for our October seminar, which reminds me, if you're interested in more about my work, if you're interested in attending a live 3-day seminar, then come to the visitpersonsplanet.com, hit the info button there or events, and you'll see all that we have to offer. And I would definitely tell you that you want to take at least more interest in finding out about the Algo Optimizer, or just a test drive and try our trading room, and you can see for yourself and communicate with all our other members as they communicate back and forth. Thanks for watching, and remember, at this point, we have a garden variety pullback in the market. It should get a little bit scary. We're approaching some longer-term support levels, and I don't think that the market just, turns from bull to bear. We're in a massive trading range here, probably test the August lows, and after we'll see where we are from there. Thanks for watching, and remember, when we're in an active short in the market, so I'm projecting that monitor down here, recording it for you because that's the trading room. When we're in an active short, don't be trying to bottom pick as a speculator to capture. Go with the main trend of the market. Thanks again, everybody. Have a great trading afternoon.